What's up, everybody? Welcome to another edition of CRL. It's Chart Request Live. I'm Spencer Israel, joined by Patrick Dunawilla, editor of the Chart Report. Pat, what's going on?
How you doing? Are you sick of me yet? We've had a few shows. We had the morning show this morning. We did Spaces earlier.
Third show of the day, and it's 1 o'clock. But hey, you got to give the people what they want.
That's
people
true.
Want some charts. People have some tickers. People have requests, and we have a few of them written down. If you have any requests for us, you know what to do. Drop your ticker in the chat. If you want to skip that line, because I like to look at the email before I look at the chat, you can always email us. Questions at stockmarketmedia.com. I have every email request we've gotten written down here, ready to go. We always start with those requests. So let's do that. Had an interesting request here from Wavy. He asked for a relative chart of the XLE and the Qs to analyze what, in his words, is a, quote, generational buying opportunity. So, Pat, you and I were just looking at this chart, and very surprising to see the dot-com bubble tech lows, that level back into play.
Yep. And again, this is a relative chart. This is a ratio chart of XLE on the numerator, and then you got QQQ on the denominator. So as the line's going up, you have energy outperforming. As it's going down, you have energy underperforming the NASDAQ. And that's been a really, really interesting relationship to watch. Great eye there, Wavy. Shout out for bringing this up, because this is a really, really interesting point and a really important question to be asking right now. After the first half performance, like, let's just go back a little bit. Last year, energy led by a wide margin, right? It ended the year up, I think, 50% or something, while almost all the other sectors closed lower on the year. And then this year, it's completely taken it off. Tech has just soared. So it's been this mirror image of last year. And then you have a lot of people expecting to see this rotation into energy. It hasn't really broken down. It just hasn't participated. So I think that's really the question to be asking right now. And, you requested XLE versus QQQ, but I prefer to look at this relationship in XLE versus XLK. Now, it's very similar because the NASDAQ is so tech heavy, but I just think this kind of shows the relationship a little cleaner. You have it kind of in a similar spot, although I think this level is just a little cleaner because you got this, the highs here from June 2020. You can see that this has been an inflection point and a really meaningful one several times, or well, at least two big inflections there. And you're seeing it start to act as support here. So again, if this line's going up, it means energy's outperforming tech. And now we're looking at XLK. So if I asked you what direction you thought this was going and you said up, then that means that you want to be long energy and technically short tech, but at least you want to be overweight energy over tech. So
I think this chart is useful, probably, right? This is a useful chart, but
yeah.
Also just look at the performance of just look at the total returns, right? Because maybe there's a time, like, if, for example, I don't know what XLE is up this year. I can look right now.
I believe it's flat on the year.
Is it flat? Yeah,
maybe it's right. Down a little bit.
But like, just because one is performing the other does not mean the weaker of the two is necessarily a bad, it doesn't have momentum at any given time, right?
Right. And what you're kind of getting at is they could both go higher on an absolute basis.
Right.
Just one's outperforming the other.
Right. Exactly. Now, it just so happens that they've been rather inversely correlated for the better part of 20 years or more. But who's to say they can't both trend higher or both trend lower or sideways?
And I actually think that's the likely scenario here is you have tech not completely breaking down, but it just maybe just kind of consolidates, or maybe you see a correction and then a period of repair. And in that time, energy really is pretty firm and really strong. So I think that is actually probably the likely scenario. Is we're not talking tech is just not the place, you're going to lose money in tech. I think it's just more that energy might really see a pickup here in the next few months, at least.
Yep. All right. Thanks for that one, Wavy. That was really good. I have not looked at that ratio chart before. So thanks for calling that out. Let's do some more questions here from the email, and then we'll go to the chat. Damanbeer, hope I'm saying that right, asked about HDB, which is where is this bank based out of? HDFC Bank. Where are they? I don't actually know.
Yeah, so this one actually showed up on the buzz this week, believe it or not. So this one is getting a lot of attention.
Mumbai.
Oh, is it? So it's an Indian bank, huh?
Yes.
Yeah. So for those of you who don't know, I do a weekly newsletter called The Buzz, in addition to the chart report, where we look for trending tickers on social media, tickers that people are talking about a lot and showing investor interest all of a sudden. And this was on that list. So this one, I'm not sure what the fundamental reason is, if there's earnings or if it's just getting a lot of attention along with the other regional banks, given kind of the recent pickup in the last week or two. But this one's got a really clean level right here around 71. You can see that has been the ceiling pretty much since January of 2022. So almost 2 years now, this thing's been the ceiling. Or actually going back to like November. So, you've seen numerous touches and just rejection. So if it does eventually get above that level, I think that would probably open the door for a test of, I want to call them all-time highs. Yeah, it looks like all-time highs over here around 84. So 71 gets you 84, I think. You'll probably have some initial resistance around here in the high 70s, low 80s, but I think, it's knocked on the door so many times that you got to imagine the door will eventually open soon.
Well, that's the logic of support and resistance, but doesn't always work that way. What about this other one, TCS, the Container Store, which I'm always amazed is actually still around. I've never been to one before. Daniel Beer asked about this one as well. I'm not really sure. Maybe he's eyeing that $2 low. I don't know, but
yeah. So I'm with you on this. The first time I heard that this store actually existed, I was like, wait, so you're telling me there's a store that just sells?
Wait, that's not the right chart.
That's Tata. Yeah. So what is it?
It's TCS, but looks like TradingView has
here.
There it is. Yeah.
Yeah. Sometimes it does that if there's an international symbol that's pretty recognizable. And Tata is a pretty big, I think it's Indian.
Yep.
So let's see with this one. Let's start with a weekly. So successfully held the 2020 lows. That's a start. And you've seen a nice pump. It's gone from $2 a share up to $3. It might not look like much, but that's an impressive move, I guess.
It's a 50% move.
Yeah, it's hard for me to get too excited about this. I think it is nice that it held the 2020 lows, but I would want to see it get at least above this kind of former support here around 4. But it's hard to get too excited about this. I think you could also look for some sort of trend line break here. It's been in a pretty well-defined downtrend over the last 2 years or so. So you want to see it start breaking some resistance, and it just really hasn't yet. It hasn't really started reclaiming the kind of levels that you want to see it do yet. So not too excited with this one.
All right. Preet asked about NIO. Gosh, this thing is the volume in this stock has exploded this year. I don't know why, but particularly in the pre-market. Today obviously it's trading a crap ton of shares. But anyway, Chinese EV maker. I guess the stimulus is on the way over there in China, so that's why it's up today. What do you think there?
We were talking this morning that Chinese stocks were kind of getting a bid, but you're also seeing EV stocks getting a bid in the last few weeks. I know we've talked about DRIV and IDRV, which are two autonomous and electric vehicle ETFs. Those have been kind of breaking out a bit. I haven't checked them in the last few days, so definitely go back and check them. But so you kind of have two things working for this. It's got the pickup in China going for it and the pickup in EVs, but kind of working on this downtrend. I wouldn't call that a decisive break just yet, but it certainly looks like it wants to. And given that you have this bullish momentum divergence here, RSI didn't even hit oversold conditions here on that last test. Now, of course, I'm looking at the weekly. We'll go through into the daily after this, but this is actually a pretty bullish setup here. I mean, these are the IPO highs right over here, and it reclaimed those in kind of a false breakdown kind of manner. So, I mean, this looks like a big oopsie. I would be surprised if it doesn't break this downtrend here. And if it does, I think the immediate resistance is around 17, which is a pretty impressive move, 17 and a half even. Beyond that, I think 17 gets you 24, 24 gets you 32.
Oh, so boy. Now we're
I don't want to get ahead of ourselves. And I gotta imagine short interest is pretty high on this one. Do you have a way of looking that up?
Oh, let's see. I don't know. Let's find out. I wouldn't assume it's that high.
Yeah.
No. That data source I use doesn't even have it. So it does say 2.2 days to cover. So that would imply not an especially high short interest. 2 days is nothing. So I would assume it's not that high. The short percent. I
like this setup a lot.
Okay. What about DraftKings here? This thing has had like 7 green months in a row. It hasn't had a down month since December, actually. So did I, and who asked about this? This is for Gerbier. Did Gerbier and I miss the move, Pat, or what?
You might have. I think in the near term, it's got some resistance here. That is the 61.8 retracement of the decline. I mean, that is a really impressive move. You kind of had this double bottom here, and it's worked its way back. I would expect it, as you said, I mean, we've had 8 months, something like that, of just consecutive gains. This would probably be a decent spot to just kind of consolidate that move before it eventually goes back up towards 38.2. I mean, I think these are major lows here. So I would be surprised if we just hit our heads on this and then went right back down. I mean, we could, but I think the more likely scenario is you spend a little bit of time here consolidating this initial move and then ultimately resolve higher towards the 38.2.
Preet asked about Roku also as well. I'm pretty sure we talked about Roku last week, and maybe it was 2 weeks ago. I honestly can't even keep the days straight anymore. But this is one of the growth techie names that has not participated in the rally of this year. I guess no, that's not true. That's not true. It's gone from 38 to 71, so it has had a good year. But
no, but I see what you mean.
But like,
the type of retracement that we've seen, like some of the bigger mega cap stocks make.
Exactly.
Right?
Yeah, like that weekly chart, it looks flat, right?
Right. But it is forming like a nice base. I think this is an ARC stock, which would make sense because it looks very similar to a lot of those ARC names that are kind of coming out of bases. They're still down 60-70% from their highs, but they're up like double from their lows from last fall. So they're in kind of this weird spot where they're like squeezing, but they're still down a lot. So I think this one's kind of working on a rounded base, and it's kind of working on eventually moving higher. It's a slow process, just like any other base. You have this bearish momentum divergence here in the short term that could cause some weakness. So I'm not sure if this one has earnings coming up soon. If it does,
it does. Yeah,
okay,
I'll tell you. Earnings are oh shoot, on Thursday.
Oh man. So right. I think you could see like a pretty sharp move to kind of have this momentum divergence kind of play out, resolve. But I think this base will continue to form, I think. And So if you do have a sharp sell-off, maybe it's a buy the dip if it keeps forming this base here. It's kind of hard to find some levels of resistance. You don't have very clean levels here. I would say if it breaks this base around 75, I would say you got to look to 104, maybe 100, call it, as potential resistance. That kind of makes sense, 75 to 100. I know I'm probably oversimplifying it a little bit, but I think that move's totally possible.
Here's one. This is from Dan, I think. LPG, Dorian LPG. This is a liquefied. What does it stand for?
Nat gas, huh?
Yeah. No, it's liquefied. What's the petroleum gas? That's what it stands for. Liquefied petroleum gas. Yeah, basically butane, right? Or propane, right? And that chart looks ridiculous to me.
Yeah, that is a
in a good way.
Yeah, no, I and you know what? Somebody brought up a great chart last week in our chart request live review. I think it was BTI or something, and it ended up showing up on one of our scans later that week. So I really like doing this show because I end up seeing a lot of interesting charts that I'm not seeing that end up surfacing later. So hopefully this is one of them. But this is, like you said, great looking chart, breaking out of a massive, 8-9 year base, breaking out to all-time highs. We've talked about the energy sector potentially getting a bid here. So if that happens, you got to imagine that's going to be a tailwind for this one as well. And when a stock breaks out to blue sky territory like that, I like to use Fibonacci extensions as a way to look for potential targets, because with no price memory there, it's hard to anticipate resistance when there's been no history there. So for this one, the 161.8 extension is around 37. So from current prices, that's a 37% move? That's not nothing. This thing definitely has some decent upside here. Great chart. Shout out to whoever brought that up.
Well, let's pivot away from energy, just so it's not just 13 energy stocks.
Sure.
What about?
Although there's information in that, right? The fact that we're all talking about energy stocks all of a sudden.
I don't know what that says, but hey, the flows aren't. Anyway, whatever. Moving on.
Yeah.
RMBS, Rambus. This is a semiconductor $5-6 billion company. They do report earnings Monday after the close. So know that if you're trading it or buying it, but.
Yeah, so I actually have it marked up because it also showed up on our scans this week. I'm starting to notice a little bit of pattern. Some of the tickers that I'm noticing are trending are also being talked about here. So that kind of validates our scan a little bit. These are actually tickers that are being talked about a lot. But this one has just been in a really, really strong uptrend, even throughout some of the weakness last year. It was pretty early to break out. I mean, this one was breaking out way back in November, right after stocks bottomed. So this one's been leading the way. So this really interesting one to watch here. I had that little level drawn there, but this, to me, this action since May, or call it June, this looks kind of like bull flaggish to me. This looks like a healthy consolidation within an uptrend, and you've seen it kind of try to break this level. I imagine that's earnings. I don't have my earnings things on.
What day was that?
That looked like, maybe it wasn't. Yeah, May 25th. I'm not sure what happened there.
May 25th was... May 24th, maybe? No, there was that was just a broad base. That was a NVIDIA the greatest earnings report of all time. That's what that was.
Right. The day, I think they probably added more in market cap than any other stock ever. Don't quote me on that, but that was a memorable day to say the least. So, on that gap up, then retraced, and it held that gap twice. So I think that's really constructive. There's information in that. It had the chance to break down there, and it didn't. Buyers stepped in. This thing looks like it wants to resolve higher. I would potentially get involved if it broke this 67, basically the former highs. You could get a little cuter with it and draw this as kind of like a pennant if you're into trend lines like that. But yeah, this one looks like just given how strong that underlying trend is there, I think it likely will continue higher. And something that's this strong, it needs these breaks where after it sprints higher to new highs, it just kind of consolidates for a little. I think that's healthy action. It allows the trend to kind of keep going.
All right, what about Medtronic here? Let's do some medical devices.
Sure.
MDT.
MDT, yeah. All right. Nice little base forming here. I'm not sure what these drawings are from over here. Well, it's always funny. Sometimes I like leaving my old drawings on my charts because it's amazing how some of your old markups end up coming into play again. And if what we believe is true, that price has memory, then that makes sense. You should see levels act as inflection points later on in the future, even if it is a few years later. But back to Medtronic, definitely improving, and overall healthcare sector, I think, is pretty interesting here. It hasn't really participated much this year, and I think it's being talked about a lot, at least among technicians, as a potential candidate for rotation if we get it in the second half. And you're already kind of seeing it a little bit. If we start seeing areas outside of tech really pick up here, I think healthcare is likely to be one of them. And longer term, I know medical devices have been one of the stronger areas within healthcare, so it would make sense to see this one pick up. But first off, coming out of that downtrend line, so that's number one. That's constructive. Forming this nice little base here. It's a little messy, but this is when you kind of drop it down to a daily chart. Yeah, I guess you could kind of draw it like this, especially in the short term. That looks like it's kind of acting as resistance. But yeah, I'd say around 90, 92. You have this level here. We've tested it several times, so I think we have a shot of getting above it. But it's like a lot of stocks in this kind of base building phase, and that's how you build momentum. It's really slow at first, but then it really starts to get going. And every time you break a new resistance level, you kind of attract more buying interest. So it's in a constructive phase. It's trying to go from a stage one basing phase into a stage two uptrend. So it's kind of in this transition. I think you want to see it break 92 in the near term.
What about Voya? The insurance slash for their financial firm, insurance, workplace retirement, that sort of thing.
Yeah, broker dealer. This one actually looks very good, especially for a financial. I don't have to tell you guys, if you guys watch the news, financials have been kind of iffy this year. And most of that's been associated with the banks, but when they throw the baby out with the bathwater, and financials, even if they weren't regional banks, they still got hit for the most part. This one, though, look at that, working its way back towards the former highs. And this is a daily chart too, so there haven't been too many days higher than this. I mean, just whatever price action's right here, that's pretty much the only time in the stock's history that it's been higher than that. So I think this one looks really good here. I mean, that level, this is an old drawing, by the way. Let me just get rid of that. We'll kind of redraw that to include the more recent price action that's taken place. But yeah, I mean, I think if it breaks that 77 level, we're talking a decent leg higher. If you draw it with the fibs, 86. But I think in terms of relative strength, that's pretty impressive. I'd like to see this one on a relative basis. Here we have Voya versus the financial sector, XLF. This is a ratio chart, so again, when the line's going up, it means Voya is outperforming its sector. So that's the definition of relative strength right there. But you're seeing on a relative basis too, also holding some pretty key levels, and looks like a decent spot to start seeing some outperformance versus the financial sector as a whole. So, and now imagine we get rotation into financials. So you have, if financials start outperforming the broader market, and then you have this stock outperforming financials, that's kind of top down right there.
Yeah. Yep. Let's stay in the sector, sort of. We get a couple questions about PayPal. PayPal is in the financial sector. It's in the XLF ETF. It's like the 16th largest holding. So it is a financial stock, but it doesn't trade really like it's really a growth stock, right? If you look at how this thing trades. I know there's been some stuff written about PayPal, and they face this existential threat from the new FedNow system, which is the Fed's new interbanking lending system, basically.
Is that like Swift or something? Like,
so sort of. It's not a consumer facing entity. It's a bank to bank thing. But I've seen some stuff about how this is like a big threat to PayPal because whatever. No, neither here nor there. All you really need to know about this thing is, even though it's a financial stock, it really trades like a tech stock.
I had to make sure that my chart was in log scale. It was in log scale, because this decline is just, that is wow. Yeah. And this was such a household name prior to the bear market last year. I mean, it really, really got taken to the woodshed, but really, it's definitely has a constructive look to it right now. So you had, this level was tested twice, the 70-ish level. We finally broke below it in May of this year, but you had kind of this this failed breakdown. If you want to call it a bear trap, we can call it that too. But the point is, it often leads to a sharp move higher. And I think you could probably see that, you have this little shorter term downtrend here. I say short term, but that's still a year, this little trend line I'm drawing. So if it can break that, which I think, given that this move is starting from a pretty long-term fail breakdown, I think that'll get you the trend line break. From there, you want to be looking at around 95. So, we'll say 75 gets you 95. All right. And maybe even higher. I'm trying to be a little conservative here. 95 gets you 113. And then we're dealing with this long-term trend line here that it broke down from. But, Spence, a lot of people give trend lines a lot of crap, but how about this one, huh? I mean, if you had seen this breakdown, and this was a pretty valid trend line, you had numerous touches over the years. And if you saw this one breaking down early in 2022, and you were a long-term holder of PayPal, and you got out, that would have been a pretty good sell, I would say. Even if you had waited a week or something.
Yeah, it's very hard to know sometimes when to sell. Obviously, you can look at the high and say, I should have sold up there, but there's very often no way to know in the moment. I guess that would have been as good a signal as any. And by the way, I misspoke. FedNow is a consumer-facing service. It's actually both for individuals and for banks. It's basically a way for anyone to send money directly from their bank account to someone else at another bank, right? So it's kind of like Venmo, but for banks.
Oh, interesting.
So there are some talks how the Fed has said it's not really supposed to. It's not meant to replace Venmo or PayPal. I could see it maybe replacing Zelle, which is just a thing that the banks came up with on their own.
Does PayPal own Venmo?
Yes. No. Wait, doesn't Square own Venmo? I think Square owns Venmo.
Yeah, I mean, I know somebody bought Venmo a few years ago.
Oh,
right?
no, I'm sorry. PayPal doesn't. I was wrong. PayPal does own Venmo. My mistake.
Oh, okay.
Yeah, you're right.
And back to this breakdown here, I think this is really interesting here because you had, and this is just a little bit of a learning session, if you will, but you had two really key breakdowns at this level. You had it breaking the pre-COVID highs, which were also the 2019 highs. So it broke the trend line and it broke those highs. So that was a pretty good indication there. Again, it's always hard in the moment. I'm totally Monday morning quarterbacking here, but I think, it's worth studying these things, and maybe we shouldn't give trend lines as bad of a reputation as they get.
All right, that'll be a good place for us to wrap. We can't get to all the questions. I apologize. If you have a ticker you feel super strongly about, you want us to discuss it, email us. That's your best bet. questions@stockmarketmedia.com. Thanks to Pat. We'll be back on Thursday. I don't think Straza will be quite in the state to do the show with you, so I'll probably be here with you on Thursday, but he'll be back on the show next week. Thanks to all the questions in the chat, as always. And Ryan wants a trend lines over headlines shirt. We have those.
We sure do, actually. We have
those. I had a box, and I gave my box of shirts to JC.
Oh boy!
But we're going to be launching an online store here in a little bit, so stay tuned for that, Ryan. So we'll get you a shirt. Okay, that's a wrap. Pat, talk to you later.
Yeah, cheers. Thank you, guys.
Everything's gonna be alright.